Hey guys, Dave with Moniology here. Hope everyone has had a great weekend. Today's Monday, July 5th, 2021, and this is the weekend market review where we'll dive into various different charts from a weekly perspective to give us a better sense of where we've been, where we are, and where we might be headed. Just wanted to briefly touch on something. I had a friendly debate with just a great contributor on Twitter, and I appreciate his work quite a bit in case you're listening to this. But the debate was around technicals and what they were really there to do. And his perspective was technicals are there to predict the future. And my opinion is technicals are not there to predict the future. Technicals are there to give you a perspective of where we've been and where we are. And then they create probabilities around where we might be headed in the future, given various different variables. And so hopefully over time you have enough positive probabilities and you track momentum and you figure out how momentum is performing relative to price and various different price points, and you get a gauge of are we moving higher with positive momentum, are we doing so with negative momentum, are we is there resistance that is above various levels, or is it a blue sky kind of area where there's not much resistance, so buyers will outnumber the sellers? Do you get perspective on how a chart looks relative to where it's looked 10 years ago? What has it done for the last decade, 2 decades, etc.? And then you plug those in the context of fundamentals, and then you get a picture that is hopefully quite positive towards the stock that you want to purchase. But in terms of predictiveness, in terms of the future, it's hard to say that's the case, but I guess we'll agree to disagree. So, okay, let's start with copper here. Copper, as you see here, has broken out of this effectively it was a bearish wedge here, and it broke out of this area, and now it's back testing this area amidst a bullish flag. Now notice what happened here, and I've been talking about this for a while to premium members, but since this is going to be publicly available, I just want to elaborate a little further. We had a breakdown of this move in momentum here, even as price effectively was going up, and we had a shooting star, which is a bearish indicator where you attempt to make a breakout and you can't hold those levels, and then all the momentum traders recognize this, they get out, and you create a kind of a negative trend for a while. So the question then you have to do is, okay, where is the support going to come in? And again, this is where technicals are very important. You could look at price solely, which is a valuable indicator, but I don't think it's sufficient. So right now here we have in our charts, we have a 13-week EMA, the exponential moving average, and a 26-week EMA. The 26-week EMA is red, 13-week is blue. And again, these are randomly selected timeframes to give us a sense of a trend. So the uptrend that we were in basically since October of last year broke down, and then you gotta find where next support is going to come in. So my approach to technical analysis is find out where the previous breakout points were. So this was at a very important breakout point. There's a neckline here, and if you kind of draw this line up here, basically this is the level that momentum broke out from to start this major leg of the uptrend. So I expect this level to become support, right? It also happens to be 50 RSI, which is a critical RSI number. Just to give the newcomers perspective, there's 30.9, there's 38.2, 50, 61.8, and 69.1. These are Fibonacci levels on RSI. Very few people use those, but I think they are extremely valuable indicators to give us a sense of where we are. So bottom line is, what do I see here? Well, we've got MACDs that have been in negative territory for quite some time. Even as they were in positive territory, they've been correcting. So this was a healthy correction. The question is, are we done, right? Are we ready to start moving higher? And it's hard to say yet, but what I'm looking for to confirm a bullish flag breakout and continuation of this uptrend is a breakout roughly around this 438 level. If we can break this bullish flag, this upper boundary, then I believe we're setting up for the next leg higher. That's going to take us well above 4.9. So the fact that we bounced above the 50, good sign, but it's not sufficient because it can bounce and then roll over towards the next support level around, again, the 638.2. So hopefully that was a good primer into my approach, and let's dive into further stocks charts or charts. Here's gold. So gold, notice this long-term parabola, this long-term base that's been established over the last decade. We had a bullish flag. We broke out of this bullish flag, and we, due to the Fed's announcement, perhaps other reasons, sold off. Now, where is support going to be found? Well, first and foremost, we broke below the 50 RSI level, which is not a bullish sign at all. So the next level of support is this 38.2 level. This is precisely the level that we rallied from last time around. So we bounced here 2 weeks ago, and now we have another bounce last week. The question becomes, is this a little bearish flag that's setting up before we break lower? And then 1650 would be the logical support zone. Or do we rally up through 1800 above these moving averages here around 1812, 1813, and we continue the uptrend? It's going to be very interesting. It's hard to say. You've got the MACDs that have been consolidating towards zero, but very often you get one of these and you start moving higher. But if these break below zero, then we can go to 1650. I'd say the probability right now is about 75% to the upside. But let's look at how the miners are doing to give us a better sense of what's taking place. So gold bugs, like the fact that it's back testing these trend lines, right? It also had a nice hammer pattern off the lows. So 260 right now would be my at least mental stop loss. Yes, the MACDs are in bearish territory, but they can start moving higher very soon. So 260 is above 260. It's bullish. Below 260, I think you're headed towards that 240 level, possibly lower to test this lower boundary. But bottom line is, now's a good time to accumulate. And if it goes lower, then you accumulate more because we're still very much in a long-term bull trend right now. It's just a question of how long this fake breakout here has to consolidate before it resumes its uptrend. Gold juniors also back testing RSI here, which is a very valuable point. Beautiful hammer pattern on the week. That's a very bullish. That's basically the inverse of a shooting star that we had over here at 64.91. So is this going to be maintained? I know there was a lot low volume last week with the holidays and such. So bottom line is 45 is a kind of a line in the sand. There's more support around this 42 level, so perhaps 42 would be really the get out zone. But so long as it stays above 45, I think it's going to resolve itself to the upside. But it's got a lot of work to do. It needs to get back up above the 50 RSI level and soon, or it risks breaking down. GDX, so far so good, bounced perfectly off support, off of RSI support. But again, needs to break back above the 50 RSI level soon. It's still technically in bearish territory on this weekly momentum gauge. If it breaks below 30.50, then you do not want to be in this trade. On the other hand, if it stays above 30, preferably even 33 here, then it can consolidate and resume its journey higher. All right, crude oil. All right, so this has been a hell of a move to the upside here, and right now momentum is very, very strong. It's not showing any real negative divergence. Slight. I mean, what I mean by that is we're at 75, but momentum is not much higher than it was at 68 here. In fact, it's lower. So there's a slight negative divergence. Eventually, this trend will reverse, and then potentially a reversal back towards the 62 level would be quite a healthy reversal and consolidation. I wouldn't be chasing here. However, if it did break above the 77 level, there's basically blue sky till you get to 100. So it's going to be very interesting to see the way this plays out. But a big move is coming either to the upside or to the downside relatively soon because there's not much more room to squeeze here. All right, Mary Jane. So marijuana right now is trading between 11 here and roughly 10, and frankly, it's not inspiring price action. 50 is kind of that line in the sand, and it's kind of hugging that area. If it breaks 11, this could really start moving towards 15.5. If it breaks 10, then I think we're going to move towards that $8 level, which effectively would be or potentially lower to retest this bullish wedge breakout. So bottom line is there's nothing really doing here with the Mary Jane ETF. All right, palladium. So palladium, notice how we had this head and shoulders that we've been talking about for a while, and it finally broke down and had quite a breakdown. It moved from 3,010 all the way to 2,452. But we've had two very strong weeks, perfect bounce off of support, back above the 50. And if it can break above 2,800, I think palladium's going higher. It's kind of recharged its batteries here, and the MACDs are starting to move in the positive direction. So back on the palladium bull here. Platinum, on the other hand, is just not an inspiring chart right now. Below the 50 RSI level, below this downtrend, and now you've got a ton of overhead resistance. Can it rally back to 1,200? Sure. Can it break above 1,200? Yes. But right now, the likelihood is that it won't do that. And so until it breaks 1,200 here, I would stay away from platinum. Silver. All right. So silver bounced perfectly off of this breakout level and back above the 50 RSI level. It's very, very important that it needs to rally here. If it does, that would be very bullish. If it breaks this trend line, then I think we're going to 22. What I like about this is we're creating higher highs and higher lows on the MACDs, and eventually I do think this breaks to the upside. Obviously, the bullish confirmation would be a move above 30 on silver, but right now we got to take baby steps. The fact that it's above the 50 RSI is a very valuable development. Let's jump into the silver miners, see how those are doing. All right, so silver juniors, again, hammer pattern last week, very, very positive, bouncing off the trend line support, but not yet above the 50 RSI level, so it's got some work to do. Above 17, it's bullish. If it cannot hold 1450 right now, which is kind of the line in the sand, I think it's headed towards 1250. So let's see what direction it decides to go in over the next coming weeks. Silver majors, nice hammer pattern here off support, needs to break and follow through above the 50 this week, or it risks potentially breaking back lower towards that 36 level. All right, let's take a look at uranium. As you guys know, this is one of our favorite trades. It's been a wonderful trade for us and so many of you that have been following along over the last couple of years. So the URA has been decelerating for a while, right? So a lot of folks are talking about how this uranium's been in a bullish uptrend. Well, it has since March, right? But on the other hand, since 2021, it's been in a momentum downtrend. And even as price was moving up, momentum was breaking down. And so now we bounced, but we couldn't quite hold the 61.8 level. Next week will be very, very important, or this week rather, because it's below this uptrend. Now, it can always expand this uptrend, but if it cannot hold the 20 level, then I think it does potentially break down towards 18, create a bullish flag like this before resuming its uptrend. So we'll see what happens. The bottom line is, unless URA breaks back above the 61.8 level here and not only retest this downtrend, but breaks out above it, then right now I still would be a little bit cautious. Right now, all the technical indicators are mixed at best and potentially slightly bearish at worst. Uranium Participation Corp. So this one, again, the uptrend since December, this uptrend here has broken down, and now we're back testing the 50 RSI level. Let's see what happens here. Can it hold that level? If it does, would be quite a bullish reversal to the upside, because really price hasn't moved all that much between 6 and 540. It's a slight dip, but not much, and those are the best consolidations. The most bullish consolidations are those that consolidate through time, but not through price. All right, let's look at some equity ETFs, retail ETFs. So we broke out beautifully from this bullish flag, and now we're just consolidating for that next leg higher. Certainly, the MACDs are looking good, like they're moving in a positive direction. The downtrend has been broken. We're stalling here at the 61.8 level, which was resistance here in the past. but this is a healthy consolidation above the moving averages, likely to move higher. Emerging markets. So emerging markets also broke out of this bullish flag, bullish wedge here, consolidating here above the 13-week moving average, struggling so far to break above 61.8, slightly concerning because emerging markets you want to see do well here. Let's see if it can hold this 1355 level on this particular index. If not, then 50 RSI comes in at support. Either it's going to rally here or it's going to break down, and obviously we'll be on top of it. Housing index. So housing index bounced beautifully off the 50 RSI level. So far, so good. Then you could say that this is a bullish flag breakout that likely sends shares of housing sector higher. Let's see what happens. Microcaps. So microcaps had a bearish week last week, 243. Now we're consolidating near the highs, which is positive, but it needs to break out above the 69.1 level. And if it can't do that, then perhaps microcaps are setting the stage for a breakdown. We'll have to see over the next couple of weeks. Can we break above 155 to 158 here and start a new leg of this uptrend? Or is this going to cool off and consolidate towards that kind of 130 area? Transportation. So had a nice bounce last week off the 50, but I think that there's still a lot of momentum to the downside, and perhaps some more consolidation is needed. I think what would be most healthy would be to expand a base between 240 and 270 for a while here, and then continue higher. NASDAQ. So NASDAQ had a breakout last week, up 2%. RSI, very critically interesting point here. It's both this downtrend as well as the 69.1 level. Next week will be fascinating. My hunch is we're probably going to pull back. But on the other hand, you've got the MACDs that are itching to break above the 50 RSI level. So NASDAQ looks great, but cool off wouldn't surprise me. Will be fascinating to watch what happens starting Tuesday. All right, here are the Qs though. The Qs, which represent the largest index for the NASDAQ, they have broken out in really, really strong fashion. MACDs are above zero already. The downtrend has been broken, and you're above the 69.1 level. So NASDAQ is represented by the Qs, looks fantastic, and so I have to defer to the bulls on this one. Regional banks, so they've been consolidating, which is after this move, which we've been on top of since really the beginning. It's been on a tear. Now it's been consolidating after this steep uptrend has been broken, bounced off the 50. Perhaps we double bottom here, but I think this is all very constructive price action that eventually resolves to the upside. S&P, similar story. So that the index itself is now, well, it's above the 69.1 level, but still below this downtrend. We broke out to all-time highs here, which is very bullish. MACDs are coming into a bullish direction. We'll take a look at the SPY, which, like the Qs, will be very, very bullish. Semiconductors broke out of multiple inflection points above the 61.8 level, above this downtrend, above this horizontal resistance, above this downtrend. And so semiconductors are pushing the market higher, and that's a very positive sign for a continuation of this uptrend. Shanghai. So this is the parabola that I've been talking about to premium subscribers for a while. There's not much room to go here. Either Shanghai, the Chinese market, is going to break out, which would be incredibly bullish for global markets and emerging markets, or it's going to break down. So we have to watch this very closely because a technical inflection point is here. So Shanghai is on the clock. Shipping, it seems like every week the shipping ETF either is up 10% or down 10%. Right now struggling to break above the 69.1 level. And so I would be a little bit cautious here, and unless it can break above the 30 level. Otherwise, I think a consolidation between 22 and 30 is likely in the cards. Small caps. So small caps down 1.4% last week in a downtrend, technical downtrend. Let's see, it needs to break back above 1400, but perhaps a little bit more consolidation between the 1250 area and 1400 would do this index good before it reverses higher. The MACDs have been in consolidation for a while now, so I think a breakout to the upside or a continuation rather towards the upside is likely, but it might take some time. Look at the SPY. So we covered the SPX. SPY, beautiful back test here, now above the 69.1 level. It looks good. I mean, sooner or later it's going to hit resistance here, but there could be a little bit more bullish follow through before a consolidation above these previous breakout levels. Transportation, this is the IWT ETF, IYT ETF we looked at earlier. It's consolidating here. So bottom line is healthy consolidation after extremely strong move that will likely resolve to the upside. Here are the large cap financials. So they broke down as well here, as we pointed out, but found support at 35 and now starting to stage a rally to the upside, which it would be a very positive sign for general equities. All right, let's look at some financial indicators. The 10-year U.S. Treasury. So we've been pointing out the 10-year has been in a downtrend since this uptrend broke. And once we tried to break out back above the 61.8 level, couldn't break it. This is a make or break week this week for the Treasuries. If it cannot hold this 50 RSI level and it goes lower towards the 38.2 level, I think then the Treasuries are going to 1.3, which means the Nasdaq will continue breaking out, equities will continue doing well, and bonds, frankly, will continue doing well. This is, in the long term, this is a bullish flag that likely resolves to the upside. But in the short term, I think that there is still some more consolidation potentially on the 10-year Treasury. The index option adjusted spread is the comparison of the high yield junk bond interest rates compared to the Treasuries, and the narrower this spread, the more bullish for equities. So this spread is broken down, which is incredibly bullish for equities right now. And until the spread breaks higher, I'm not cautious on equities. I'm very, very bullish on general equities in the state of the economy. Inflation index, so far bounced off of this parabola, and I think inflation continues higher. However, there was quite a breakdown here, led largely by gold, the breakdown in gold, that the momentum trade to the upside does need a couple of more weeks probably to cool off. But let's see if it holds this 50 level and builds a new base to rally higher from.